To a Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined by James Gerrish. James, welcome.
Thanks, Nick.
James, I want to kick it off this week with the market. We're talking recently in the reports this morning that a close above 5,875 will turn us bullish, and we're targeting 6,000 shorter term. Just wondering around timeframes for that, given that we've already said we've got our seller's hat on too, and how the two sort of marry in with one another.
Yeah, so we're pretty well invested in our portfolio. We've only got some reasonably small levels of cash. So we're going into, we're in April, the strongest month of the year. So, we've got our seller's hat on into April. Normally we'll see a market peak sort of mid-April, but the whole month of April is generally pretty strong. So, we want to increase cash levels before going into the weak May-June period. So that's what we mean around, seller's hats on. But we'll still, as we put out yesterday, short-term position trade in Oz Minerals. So we'll still be looking around the market for opportunities as well.
Okay, on Oz Minerals, having a good day today. Obviously started rallying yesterday when a lot of people across the market were buying it, just not just us. Thoughts on that one? Is that just a nice sort of level that it's pulled back to? We're expecting a bounce, or is it different to that?
No, it's a really good example of how we approach the market and how we approach stocks. So, Oz Minerals from a fundamental standpoint has been on our radar for a while. We think it's cheap relative to other commodity companies on the ASX. We think it's got a catalyst in the near term. The catalyst is around the approval of their Carrapateena project, which we think that'll give it valuation upside. Technical standpoint, that seven, I think it was 767 was the low. It looked like a really good low, and we saw it yesterday. We were buying it on the open yesterday, and there was a wave of buying there. It was low volumes on the open yesterday in that stock, so it rallied pretty strongly as soon as we got some orders in the market. But it looks good to me. So first target is 850, but I think that could probably go higher. The next thing to look for is board approval for this Carrapateena project. But it's a good play for mine. Okay,
while we're on resources, we have other positions in this space. Thought I'd touch on BHP and RIO. Now, iron ore closed below 80 last night, or around about that level. Obviously the lowest it's been in a while, since it's been holding around 90, 80. Our thoughts on that. Both of them are having a good day today. Do you think the market's still happy to buy these stocks, and it's not as correlated to that shorter term iron ore price, thus it's worth having a look around these current levels? Yeah, no,
it's correlated to iron ore, but obviously it comes down to where analysts have iron ore projections at the moment and where spot prices are. So, to give you an example, say BHP, for instance, if you plug in spot prices for iron ore at this juncture, you get EPS, earnings per share, of about $2 a share. If you use the current projections of analysts out there, you get about $1.50. So, analysts are more negative around their forward projections for iron ore. The fact that iron ore is coming back isn't unexpected. So, prices change on stocks when something happens that is unexpected. Iron ore declines are expected if they go further than the market's anticipating, or they don't pull back as quickly, or as they stay firmer than the market's anticipating. Then you see changes in the underlying price of those commodity producers. So we're happy with those two. They actually look really good. So BHP RIO, when it drops below 60, there's strong buying there. BHP, when it goes sub 24, there's strong buying there. So we've got them in the portfolio. We're happy with them at this juncture. For short-term orientated traders, you can be buying those here as well.
And touching on analysts before, probably the same analysts that had a $50 target on BHP when it was at 40 or in the 40s, and it came all the way back to 14. They tend to lag sometimes when I guess stocks are going through an upgrade, well, not so much an update cycle, but a flat cycle, and then when you look at the other side of the coin, when guys like us are actually buying stocks, they tend to be a bit behind the curve. Wouldn't you agree?
Yeah, we use consensus forecasting, so we get all the analysts' consensus coming in to spit out where analysts are at that particular time. So, commodity prices are really hard to predict into the future. There's so many variables in the commodity markets, but you think about where the risk is the risk to the upside that they're too bearish on iron ore at the moment, or do you think they're too bullish on iron ore at the moment? Our opinions is they're too bearish at the moment, and we're likely to see upgrades to earnings forecasts as that more bearish view doesn't play out. So even if it tracks lower, that we can still see upgrades to earnings forecasts for those guys.
Okay, and while we're on analysts, I thought I'd touch on the banks. Now, banks, if you read a lot of analyst commentary, are trading at a premium to what a lot of consensus valuations are. However, that doesn't mean they're going to not keep on rallying. We're seeing quite a decent period for them. We're seeing a fair bit of buying support. Three of the big four, ANZ, Westpac and NAB, all go ex-div in the coming months. Our current view on that, given that we currently hold ANZ and a little bit of NAB, doing well on both, and we have also indicated that we're probably going to flick our CBA when the the appropriate time arises in the short term. Yeah,
CBA, NAB, and Westpac in our portfolio. So I guess you think about overvaluation on a number of metrics. So from a PE perspective, they're about 12% overvalued from their longer term metrics. On a dividend yield perspective, they're yielding as a sector around 5.5%. Historically they yield about 5.9, so they're about 8% overvalued in that context. That doesn't say they don't go higher from here. So one of the things that's happening in the banking space is they're repricing their mortgage books. APRA are tightening up credit criteria, so they're going to have an issue with loan growth into the future. But right now they're repricing their books, which is seeing upgrades to earnings. So you're seeing bank earnings getting upgraded at the moment. April, as I keep saying, is really seasonally strong on our index. A large proportion of our index is banks, therefore it's a very seasonally strong period for banks. $7 billion worth of dividends going into investors' pockets this week alone. So that's going to flow into the market. Cash levels are high from a fund manager perspective, so they're going to have to reinvest those dividends into the market, and that should push stocks up into our April short-term top that we're anticipating. Okay, and lastly, just want to finish on the insurance space. We own QBE and we own Suncorp. We obviously had Cyclone Debbie over the last week. One that we don't hold, that you've indicated in the reports that is probably more affected, is IAG. Just wanted to get the updated perspectives on those two stocks that we hold and the space in general after what we've seen. Given we've had a few questions, and I'm sure a lot of investors out there have a bit of exposure to this space. Yeah, well, you think we've had a natural incident up in the northern parts of the country. Insurance stocks, should be hit on the back of that. Both Suncorp and IAG have been sold down on the back of that. In relation to financial impact on those companies, Suncorp has cover allowances plus reinsurance cover, so that should not be a problem for Suncorp. They shouldn't have an impact on their earnings as a result of Cyclone Debbie. QBE is in the same boat, so we anticipate no impact financially for QBE. IAG has a little bit of an issue in the context that it's they've got, for one event they can have about $140 million worth of claims. Debbie's going to be around about that value, so they could have an earnings impact, IAG. So out of the three, IAG is at most risk, followed by Suncorp's got big exposure up there, but they should have enough cover at the moment out to June 17 to withstand it, and QBE shouldn't be affected. Okay, I guess given that QBE is sort of held, the one that has been affected that we hold is Suncorp. Is this a buying opportunity, or you'd prefer to wait? Yeah, no, we've still got to buy in Suncorp. We'd be happy to buy it here. Short-term weakness opportunity. QBE is interesting here. So like 1330 has been a really strong resistance point for QBE for a while now. So I think if it busts up above 1330, then that's a short-term buy in terms of QBE. Well, we like the sector. Interest rates going higher. There's a whole range of thematics that we've spoken about in presentations gone by. We like the sector. We still do like the sector, and what's happened up north doesn't change that at the moment. Fantastic. Thanks for the update, James. And as always, anyone watching, feel free to get in touch with us by calling the 1300 number. That's 1300 301 868. That was toll free. Or conversely, you can always reply to this email, which goes to info@Market Matters, and we'll get back to you either in the Monday report, where we'll answer your question, or we will call you individually. Thanks for watching.